Hello and welcome to this Monday's weekly morning market briefing. We've got a lot to talk about, but firstly, American troops are at risk across Middle East amid rising tensions. The US does warn, as well as that Jeremy Hunt looks at ways to extend help for first-time home buyers, as well as that private equity firms face their worst year of exiting investments in a decade, but we've got lots to talk about on the charts. Also, lots happening on the economic calendar, but we'll come to those two near the end, so make sure you stay around till you see that. But before we get into it, make sure to subscribe and let's get straight into it. So first to talk about, of course, is the US, which troops are at risk in the Middle East. Now, the US has warned that American troops and personnel in the Middle East face a significant escalation of attacks against them. Now, this comes as Israel's war, Israel versus Hamas's war, does threaten to broaden into a regional conflict. And this is what we've been talking about a lot recently, is the possible escalations coming from Israel, Palestine kind of conflict around, the territories of Gaza. Now, we are expecting a ground invasion into Gaza still, and there's continuing airstrikes into Gaza territory as we speak. As well as that, there are some probing attacks by Hamas militants sometimes infiltrating into Israeli territory still, but that's on the small numbers now. But this is still, as many hostages of Israel and other foreign nations are held by Hamas in Gaza territory, in the tunnels, most likely underground. As well as that, we have the escalating risks on the Lebanese border with Israel and Syria as well. Now, the fear being echoed by the US Secretary of Defense is that it will, kind of draw Iran-backed militants across the Middle East into the conflict. And this has been a worry, especially with Hezbollah, as I said, on the Israeli-Lebanon border, which has, forces of plus 50,000 members, and these are well-trained forces with, high and strong motivation, strong motivations, high ideological ties to Shia, ideology, as well as that, they are well funded by Iran. This is a key paramilitary of the Iranian state, and so it's a big fear for Israel that if they do enter Gaza, these Shiite militias will also enter. And obviously there's many other militias that have been funded by Iran in these territories surrounding Israel, including the Houthis in Yemen, which last week on Friday I did talk about how the Houthis had fired multiple missiles towards Israeli territory, and as a result the US warships had shot down those missiles. So these escalations do seem to be taking place. Now, militants across the Middle East are beginning to attack US military bases, with 2 US military bases in Iraq last week being attacked, where 2.5 thousand US soldiers are based, as well as another 900 in Syria, where the same risks are posed. Now, we know, as I just said, there's many of these Shia militia groups which are funded by Iran in these areas. This has been the kind of geopolitical kind of strategy for Iran for the past decade really, is by funding these proxy wars in the Middle East using Shia militias as the kind of dominant religion and dominant sector of religion in Iran is the Shiite kind of following, and therefore they're kind of using these groups in other nations around them to kind of attack maybe Sunni groups, or Sunni governments, Christian governments, and Jewish governments such as those in Israel. And this is kind of the territorial dispute with Palestine, and Israel is now possibly dragging in one of those groups, especially being Hezbollah, but now also these other forces such as the Popular Mobilization Forces in Iraq and other similar forces in Syria. So definitely high levels of escalation possible, and obviously with any escalations with these Shia militia groups in relation to Israel will bring forth issues with the US, as we've seen with these attacks on US military bases. Now, this has led to Washington ordering all non-emergency US government personnel to leave Iraq. Now, with the Defense Secretary Austin saying the US had a right to defend itself, and the tensions continue to rise on the Lebanon-Israel border as well, and that's where Hezbollah are based, as I've said before. And in response to the tensions, the US has sent more air defense systems to the Middle East, as well as redirecting one of the 2 East Mediterranean strike groups to the Persian Gulf with troops, as obviously the Persian Gulf is the area where escalations with Iraq or Iran would require US troops to be based, and a large part of the risks to US troops aren't the US troops actually getting involved anywhere, but just being attacked as a result of being allied with Israel. And with that, the US has sent those air defense systems such as the Patriot missile defense system, which obviously is a very strong, powerful system, but also a very expensive one, and so it'll be interesting to see how that shapes up. Now with Netanyahu, so Prime Minister Netanyahu, Benjamin Netanyahu, saying Hezbollah would make the mistake of their life joining the war, and also saying we will strike it with force. It cannot even imagine and the meaning for it, and the Lebanese state will be devastating. So I'll repeat that because it was kind of worded a bit wrong, but we will strike it with a force it cannot even imagine, and the meaning for it and the Lebanese state will be devastating. Sorry, it's just written quite poorly, and this obviously comes as areas near Lebanon are beginning to be evacuated by Israel, and some also of that taking place within Lebanese territory as well. Whilst the second in command of Hezbollah did say, Israel would pay a high price if it launched the ground invasion into Gaza. So, making that warning once again that if Israel does enter Gaza, Hezbollah will then involve themselves to a greater extent, and begin attacking Israel from the northern border, which obviously will have devastating impacts on Israel, as now it'll be fighting this conflict on 2 fronts, and that's let alone if the West Bank then escalates, or even the Golan Heights as well, and then you're possibly then you're opening up multiple fronts, 4 fronts even, which will obviously be detrimental to the Israeli state. With the Prime Minister of Lebanon also saying that he would not hesitate to make every effort to protect Lebanon. So obviously that's also worrying messages, because now that means that if the IDF does respond to an attack by Hezbollah, maybe even stepping into Lebanon as a result of trying to clear out Hezbollah territory, that's also going to trigger the Lebanese government, to step in as well. Now, Israel stepped up its bombardment of Gaza over the weekend ahead of an expected ground offensive. And this is the ground offensive that we've been talking about since the 7th of October. It's only believed to be delayed at the moment due to, these attempts by the US to get their own hostages out of Gaza, as well as, other Western nations. Now, a UN convoy of 20 truckloads of aid will be permitted to enter Gaza on Saturday, and that's despite the fact diseases are now being attributed to the poor sanitary conditions and water issues which are starting to occur within Gaza territory, and nearly 1 million people have been forced to flee their homes in Gaza since October the 7th, and that's when Hamas entered Israeli territory and massacred over 1,400 civilians and IDF soldiers. So lots is definitely occurring in the Middle East, with these escalations obviously only going to drive safe haven assets even higher in their value. So this is why it's so important to stay on top of all this news, in addition to just why it's important to know, but also because it affects gold, silver, Bitcoin, the US dollar so much, as well as obviously any US defense companies. So definitely keep your eyes on this conflict. Now, next article to talk about is Jeremy Hunt, which now is looking Jeremy Hunt which now is looking to extend help for first-time homeowners. Now, Jeremy Hunt is now planning new measures to help people buy their first home, and this comes as high interest rates challenge those trying to get on the property ladder early. And obviously this has been a long-term issue for the UK and many other Western nations, actually, where, nations like the UK, which are developed in the West, aren't looking to kind of build any more houses, aren't looking to kind of take away any of their green areas in place for housing. As a result, there's kind of a supply shortage in these nations, but demand for housing's only growing. As a result, driving these prices even higher and not enabling, first-time homeowners especially to get onto the property ladder, as they just can't afford the rising prices for houses, and obviously the issues that we're about to get into around these around first-time homeowners. Now, with one option being discussed by Jeremy Hunt and his team being extending the mortgage guarantee scheme that allows and helps homeowners purchase their first property with just a 5% deposit, and this is obviously in contrast to the higher deposits which someone would normally pay. And obviously this is helping out first-time homeowners, because it means that they don't have to save for as long before they can actually start to put down a deposit and start to put themselves on the property ladder, with the scheme applying to properties up to 600,000, so clearly targeting it at those low income kind of younger individuals which don't have much of a deposit to put down and don't have much money to buy an expensive house, obviously. So this is kind of what Jeremy Hunt is targeting. Now, the scheme was first introduced in the pandemic and is due to end in December, but is now expected to extend for a further year in the yearly budget. And obviously we have the yearly budget every year, as it says in the name, but this takes place in autumn and will essentially set out kind of the Chancellor of the Exchequer's policies for the year and how he looks to kind of improve or change the economy for the better, and also review of their own performance for the past year. So that will definitely be interesting and key to how the UK economy will shape up and how it will affect markets, obviously, within the UK. Now, options have fallen for buyers with small deposits, has fallen for buyers with small deposits as well, just because of lenders cutting the number of products available. And this has been primarily happening within the housing market for younger individuals, with Hunt now looking for improvements to existing ISA and tax-free savings, as well as enabling individuals to save more for a deposit for a house. So this is really what Hunt is also looking at doing, is not only enabling people to start getting on the property ladder without a large deposit, but also then helping them save that little bit for that small deposit that's needed. And obviously he's looking to do that by allowing people to save in a tax-free manner, therefore being able to save more money without seeing that money then go to the government. And now the Help to Buy scheme should be back on the table, which closed in March but gave prospective buyers a 25% government bonus as long as the house costs no more than £450,000 in London and £250,000 in the rest of the UK, in the rest of England, sorry. So definitely these new policies are on the table. It'll be interesting to see how they affect the UK housing market as well, because obviously this will create a fluctuation and a change in demand once again. So it'll be interesting to see how it affects that. With the lifetime ISA, however, still existing, and that does let people use their savings to buy houses without incurring tax charges. But the property price cap for that is set at £450,000 across the country. So yeah, that's definitely something to note. But then again, people that are buying their houses for the first time aren't likely to be buying super expensive houses anyway. With the new package of measures for first-time buyers heavily weighing on the state of public finances and the economic outlook over the next few months, which is why it's so important to keep your eyes on it. So definitely keep your eyes on the UK housing market. Definitely listen out for, the UK's kind of autumn budget statement, and just keep your eyes on the UK's politics in general. But next to talk about, of course, is private equity, which has been an interesting state to say the least for the past year, and this is what the article really talks about. Now, private equity firms are facing their worst year in a decade for selling portfolio companies, and this comes as interest rates reach new heights and geopolitical tensions rise. And this is what we've been talking about a lot, is kind of the effect that high interest rates have been having on the state of UK private equity and other kind of financial markets as a result of interest rates being too high for companies to really acquire other companies and buy them out or sell themselves, because people aren't able to find the debt which they would need to acquire a company, because obviously when you're acquiring these largely valued companies, you don't have that cash on hand. It might all be tied up in assets. Therefore, you look to debt, which you can then finance that purchase over a number of years. But if interest rates are too high, then that debt is too expensive to take on, and therefore these acquisitions don't take place, and private equity firms can't sell their investments. Now, in the first 9 months of this year, buyout firms generated $584 billion. This is $100 billion shy of what the industry raised during the same period last year, and almost 2/3 below the record $1.4 trillion generated in 2021. 2021, sorry. And this is kind of, a really important thing to note, is this difference in, how much the private equity firms have been generating, selling, buying, in comparison to prior years. And this really shows the effect of higher interest rates, because obviously 2021 had those low interest rates, those historically low interest rates of 0% and 0.25% across the world, and so private equity firms were really able to finance that debt at such cheap costs and really purchase whatever they needed and then grow that exponentially and then sell it easily to a looking buyer, and that's really why we saw such high a kind of cash flows during those eras. And higher interest rates, as a result, have hammered the market for initial public offerings and made companies wary of making acquisitions, as obviously companies aren't looking to start selling their shares and making themselves public if they know that interest rates are too high for individuals to want to invest in the stock market at these times, because they could just earn that interest elsewhere in a bank or something, which would be far safer anyway. Now, with the last time buyout firms made less cashing in on their portfolio was in 2013, so a long time ago, and really setting the stage for how bad the situation currently is within the private equity industry. Now, one industry executive said that buyout firms were still seeking 2021 prices for portfolio companies, while potential acquirers and public investors wanted valuations that reflected higher interest rates. So that clear difference in expectations of buyer and seller is having a great effect on the lack of cash flow within the industry. And in response, private equity firms have been increasingly utilizing margin loans and net asset financing to fund distributions to investors. And in another sign of strains facing the industry, EQT Group, one of Europe's largest buyout firms, this week said it was making plans to hold private stock sales for its private portfolio companies, given the struggles in the IPO market. So these clear issues are being shown within the private equity firm industry. It'll be interesting to see how private equity firms try and respond to these issues and improve themselves to deal with the issue. But next to talk about, of course, is the charts as we load them up here, with US indices continuing to fall as we bring up the Dow Jones. So as we can see here, last week we did higher highlight, sorry, the possibility that US indices, especially the US 30, could respond to this level. Sorry, to this level here. On the charts, the 61.8% Fibonacci area, as we had highlighted this as an area of liquidity before, and so we said there was a high possibility of a strong level of supply orders to be in that area, so strong number of buy orders within that area to push the market higher for US indices, but we haven't actually seen that going into this week. And coming out of last week, we have just seen the continuous sell-off in the US 30 as well as the Nasdaq, with US indices falling in their price and now kind of breaking below this 78.6 Fibonacci area. So it'll be interesting to see whether the market will continue to decline for US indices going into this week as geopolitical tensions continue to rise. But obviously, the Fed's chair Jerome Powell's speech later this week will have a great effect on the way the market perceives the future for US indices. So definitely keep your eyes on that. Next to talk about, though, is the dollar, which is continuing to consolidate. So we've been talking about how the dollar has kind of been consolidating since trying to break above these areas of 106.6 on the charts, and this was largely as a result of the fact that we then expected a double top pattern and possibly a decline in the dollar as a result of forming this pattern, making new highs, and then kind of changing the kind of the look for US for the dollar, with the dollar kind of seemingly retracing and possibly retesting these levels before looking to continue lower. However, the dollar has not declined too significantly from those levels, nor has it broken much higher. When we were kind of looking at this area, we're kind of saying there's a possibility the dollar continues higher, but we have not seen that. Instead, we've seen the dollar consolidate with this area of the 61.8% Fibonacci area being used as a consistent area of liquidity. So definitely keep your eyes on the dollar as we look to see where the dollar goes following the Fed's speech later this week, as well as inflation data coming out of the US. But next to talk about, of course, is pound yen, which is also consolidating. So not only with the dollar pairs we're seeing a great deal of consolidation, but also on the pound yen, where we've kind of formed a range of there being a kind of area of liquidity at the top here and then an area of liquidity at the bottom here, and it's kind of been ranging in that area. So it'd be interesting to see whether pound yen can actually break out of that area and go somewhere from there, but we have not seen that yet. Next to talk about, though, is USD JPY, which has consolidated in a movement into this area of liquidity that we had highlighted last week. We spoke about this area as a possibility, as an area where it should provide a great deal of resistance, and that is what we are seeing. Although we did, after we formed this cup and handle, after we spiked this liquidity, we did kind of expect a move higher on USD JPY, but we have not seen that. Instead, we've kind of seen a kind of slow movement into this area and a failure to break higher. So definitely, some representations of strong resistance within this area and a lack of buy side volume to push USD JPY to the upside. On Bitcoin, though, we're seeing a very interesting situation after it shoots far higher. So although Bitcoin's been kind of ranging around in these sort of areas, in these range periods in recent times, we have seen Bitcoin make a significant push to the upside and reaching that $30,000 kind of mark on the charts, and it's seemingly failed to break higher, but it has seen that high volume of buy orders to push it to the upside, moving from this 50% Fibonacci area, and really taking a significant push to the upside, when now it's nearing the Fibonacci extension up at 30 308. So definitely keep your eyes on Bitcoin after it makes such a significant push. We could be expecting, maybe a retracement before a continue higher. In that case, we could be looking at the 50% Fibonacci area due to that area of accumulation on the 4-hour period with this candle here. So definitely keep your eyes on that, with the 50% definitely being one to note there. But next to talk about though is gold, which like Bitcoin has seen a great deal of buy orders, and largely this has been as a result of the Israeli-Palestine conflict beginning on October the 7th, and from that area we saw a significant push to the upside, and this is clear from gold going from 1817 all the way up to now 1980 is what we're at currently, but it did spike near to that $2,000 mark. So definitely keep your eyes on gold as it continues to make these really significant moves to the upside, making new highs not seen since July the 26th, which was before we had such a significant change in the Fed's rhetoric around raising, bringing down interest rates and that sort of thing. So definitely keep your eyes on gold as it shapes up to be in a really interesting position with the geopolitical tensions rising. And this is why we talk about Israel so much. This is why we talk about geopolitics and politics so much, just because it has such an influence on gold, which people don't expect. But don't let that make you underestimate the possibility and the kind of volatility which ensues following anything Fed related. So definitely keep your eyes on Jerome Powell's speech later this week. But lastly, to talk about the charts is oil, which is continuing to kind of make an upward channel, moving upwards in this area, as we can see here. So it'd be interesting to see whether it will continue in this channel to the upside, whether it will continue to bounce off any of these areas. I'm kind of just trying to see what areas could shape up for gold, for oil, as it continues to kind of move higher, but definitely this area here of liquidity, which was once resistance for oil, and we did highlight before it even came into contact with this area, we did say this was going to be a strong area of resistance. It proved a strong area of resistance, and what often happens, these areas of resistance after price breaks through, is it then gets used as support. So definitely keep your eyes on the charts to see if oil can move down to that area before finding liquidity and buy side support to move even higher. So definitely keep your eyes on that. But that's all to talk about in the charts. Lastly, to talk about, of course, is the economic calendar, where we have lots of data coming out this week. So firstly, to talk about is German consumer confidence, as well as German manufacturing. Now we know Germany's been an interesting economic situation recently, with them having some serious manufacturing industry issues, especially around the production of the automobile industry. But that said, we are forecasting better rates for manufacturing. So definitely keep your eyes on that. And consumer confidence is still low in Germany. So definitely keep your eyes on that. As well as that, we have UK unemployment data coming out, as well as employment change, so obviously some very key and significant data there. As well as that, we have Aussie inflation rate, and obviously that's important if you're trading any AU pairs. As well as that, we've got German business sentiment, so once again more German news, as well as Bank of Canada interest rate decision, so very important for USD CAD, as well as Jerome Powell's speech later this week as well, which obviously will have such a monumental impact on markets, anything dollar and US indices related. So definitely know what's going on in relation to that. As well as that, we have the ECB interest rate decision and ECB press conference, along with the US durable good orders and GDP growth rate figures. Also, we have US index figures as well, US price index figures, so inflation data coming out, as well as US consumer sentiment. So definitely keep your eyes on all this data coming out. Super important data. It's going to be a big week for Germany, the ECB, the UK, and the dollar, so the US. So basically affecting all these major markets around the world. So definitely keep your eyes on that. But that's all from us at Wildwood Capital. If you're here to the end, make sure to subscribe, like, comment, and we'll see you in the next one. But that's all from us at Wildwood Capital. See you later. Bye.